Next up, folks, we have Capricorn Metals Executive Chairman Mark Clark. Mark is a chartered accountant with over 30 years' experience. He has overseen Capricorn's transition from explorer to developer and was instrumental in the July 2021 Mount Gibson acquisition. Prior to this, he was the MD and Executive Chairman of Regis. So please welcome Mark to the stage.
Thanks very much, Paul. Before I start, please excuse my voice. I'm carrying a head cold brought home by the 9-year-old Petri dish at home, so I'll get through it as best I can. For those of you who are not familiar with Capricorn, we just completed our second very successful year of operations at our high-margin Carlawinda gold project in the Pilbara. But the focus of my presentation today will be more around the Mount Gibson project in the Murchison that we acquired in July 2021. We've put a huge body of work into that project since we bought it. I think we've drilled now about 160,000 metres of RC and diamond on the resource, and we've done a very significant body of work around feasibility studies, which all culminated in a 1.45 million ounce maiden reserve and really strong pre-feasibility study in April this year. So I hope by the end of the presentation you get a sense of the scale and quality of that project. Before I get into details on the projects, I think it's worthwhile to have a very quick look at where successful development of Mount Gibson has the potential to take Capricorn in the context of the Australian gold industry. Having put a maiden reserve on the project, we now have 2.7 million ounces of gold reserves, which is a really strong position for a small company like ourselves, and compares very strongly with the mid-tier peer group. That gives us the 8th largest all-Australian gold reserve base amongst ASX-listed gold companies. With the forecast production from Mount Gibson at around 152,000 ounces per annum, that gives Capricorn the potential to go beyond 270,000 ounces per annum gold production post-development of that project, and would rank Capricorn amongst the 10 largest ASX gold producers. And probably most importantly, we forecast that will continue to be in the lowest quartile of the cost curve of the Australian industry. So I think in terms of scale, Mount Gibson has the potential to put us into a really small subset of the Australian industry, producing 250,000 ounces a year and more than 2.5 million ounces of gold reserves. Before I move on to talk about Mount Gibson in more detail, I'll just give an update on the Carlawinda project in the Pilbara. Because obviously it's our cornerstone asset, it's producing really strong cash flow, which will go a long way towards underpinning our ambitions at Mount Gibson. And I think in terms of what we've achieved there over the last 3.5 years, it really is the template for successful development of the Mount Gibson project. Carlawinda's got 2.25 million ounces of resources, 1.25 million ounces of reserves, a 10-year mine life, less than 4-to-1 stripping ratio, and a processing plant doing between 4 to 5 million tonnes per annum. So very similar scale to what we're contemplating developing at Mount Gibson. And I know, as I said, we've put out a study on Mount Gibson in April, and I know investors tend to be cynical about gold companies and feasibility studies and reserves, because I think our industry is littered with projects that have wonderful studies but then either don't come to fruition, or worse than that, they come to fruition and don't bear any resemblance to the optimistic studies that were done in the first place. So in terms of critiquing our capacity to design, construct and operate gold projects, I think we've got a fantastic recent case study in terms of what we've achieved at Carlawinda. The first gold bar was produced at Carlawinda on the 30th of June 2021. So we built the project in the preceding 18 months, which, as you know, was the worst of COVID times in terms of supply chain disruption and lockdowns. We did that on time and on budget, and our very first quarter of operations at the project produced 24,000 ounces of gold at an all-in sustaining cost less than $1,200 per ounce. So we hit the ground running, and we were cash positive from day one of the operation. In the 2 years since then, we've now produced just under 240,000 ounces of gold at $1,169 per ounce, so very low cost by Australian industry standards. Operating cash flow for the 2-year period of $306 million, of which $204 million has hit the balance sheet. And then if you add back the massive spend that we have committed to at Mount Gibson, where, as I said, we've drilled in excess of 160,000 metres of RC and diamond drilling. If you add that back on the basis that for us it's a once-in-a-decade type project commitment, we've actually banked $257 million out of a $306 million operating cash flow. So obviously that shows that the costs are real and the project is a really high margin project. So in terms of validating what we've done so far in our studies at Mount Gibson and our credentials for taking that project forward, I think what we've done at Carlawinda really ticks all of the boxes. So our feasibility parameters were achievable, in particular the reserve, 2 years in, and we're plus or minus very close to the reserve, which is clearly the most important parameter. It's the foundation on which any gold business is built, getting the reserve right. Our feasibility costings were robust. We've been achieving those as we've gone. Successful development, as I've said, with our in-house development team, built the project during the worst of COVID. There was no long commissioning period. There was no waiting 9 to 12 months for declaring commercial production, whatever that means. We basically, as I said, we were cash positive from day one. We haven't had to come back to the market. We haven't needed any more money. We've been putting money in the bank from day one of the project. We've achieved all of our target production and cost metrics, and as I've said, quite a remarkable conversion of cash flow from operating cash flow to the balance sheet. So really, I suppose the message is that we've done it successfully in the past. The project at Mount Gibson is very similar to what we have built and are now operating at Carlawinda, and I think we've got the template right to take that project forward. Before I talk about Mount Gibson in more detail, I'll just touch on a couple more things at Carlawinda. Firstly, I think it's important to note that there is significant optionality for this project to grow organically. There's currently 1.25 million ounces of reserves, which is about a 10-year mine life, but there's another 1 million ounces of resources that sit primarily immediately down dip of the current reserve pit shell. And bearing in mind that the reserve here is done at a 1,900 Australian dollar per ounce gold price, so about $1,000 per ounce below the current spot price. I think over time, given that we've got very low costs and a low stripping ratio on this operation, I think it's obvious that there's a great opportunity for us to continue cutting that pit back over time and hopefully keeping the mine life at plus 10 years for a number of years to come. In terms of exploration, it probably has been a little bit frustrating in the last couple of years. Getting access to our tenure through the Heritage Survey process has been a bit of a grind, particularly during COVID, but we're starting to get a runway on that now. We control a very big tenement package at Carlawinda, some 2,500 square kilometres of prospective greenstone. We've got 100 kilometres east-west strike of the greenstone that hosts the Bibra deposit that we're mining now, which is a plus 2 million ounce ore body. Because we haven't been able to get a big runway of regional exploration through the heritage process, our main focus in the last 12 months has been on near mine exploration. We've had some interesting success. We haven't hit anything of scale yet, but we've had some really good results at 4 or 5 projects, all within 5 kilometres of the Bibra mining operation. And hopefully, as we continue to learn more about the geology and refine our exploration model, hopefully those discoveries, whilst they'll come in as modest resource additions, hopefully more importantly, they're refining our understanding and pointing us towards hopefully finding something more meaningful to add to the mining operation in the coming quarters. Pleasingly, in the last quarter, we did start to get a bit of access, a bit of runway to start doing some regional work through the heritage process, which is really pleasing. In the last quarter, we reported that we've completed a 15,000 metre air core program at the project, targeting 4 projects all within 50 kilometres of the mine site. So we look forward to those results as they come in over the next month or so. We're currently underway with another 7,000 metre air core program at Carrot Hill, which is about 7 kilometres to the west of the mine site. And we've just completed a big ultrafine soil sampling project on the Mumbakine Well tenement, which we bought about 18 months ago. So we've got now, I think, a genuine runway. We can start turning over the ground regionally for exploration, and obviously with a big sort of 5 million tonne per annum plant at the project, the opportunity is significant, and if we can find anything regionally, it'll have a great impact for the operation. So turning now to our Mount Gibson project, as I said, we acquired this project in July 21. We were first introduced to it earlier that year, and we were very excited about it from the first time we saw it. It was a successful mining operation in the 1990s. It's located only 280 kilometres northeast of Perth and only 10 kilometres off the Great Northern Highway, so prime location in terms of developing a gold project. 900,000 ounces was mined out of the project in the 80s and 90s, focusing on the very shallow laterite and oxide open pits. And the project was shut down when the gold price was 450 Australian dollars per ounce in the late 90s, and has basically been off the grid ever since in terms of regional, or in terms of exploration and resource development. So to buy a project with a 2 million ounce resource, all sitting within about 100 metres of surface, was a fantastic opportunity for the company. So we really started in early 2022, a huge drill program up until our first resource update in November last year. We drilled about 115,000 metres of RC and diamond at the project, and that allowed us to update the resource to 2.75 million ounces. And then alongside of that work, we were also doing early feasibility work, environmental surveys, and all the work behind the scenes to underpin our first study. So both those work streams culminated in April this year with a maiden reserve that, as I mentioned, is 1.45 million ounces, and a really strong feasibility study into the development of the project. As I said, the reserve is 1.45 million ounces, so a very significant reserve in its own right. And for a company our size, I think it's a fantastic opportunity. And there's potential for this reserve to grow. The reserve average is only 140 metres below surface, and our resource is currently only 160 metres vertical depth below surface. Really robust reserve, done it again, a $1,900 gold price, 10-year mine life, 4-to-1 stripping ratio, and very low all-in sustaining costs. As I said, very shallow depths of the reserve and resource pit. In the envelope between below the reserve shell and in the resource shell, we've got some 650,000 ounces of inferred resources that couldn't be included in the reserve optimisation because the density of drilling really meant that they had to stay as inferred. So there's a great opportunity to enhance the drill data on those resources, and we'll look to re-optimise the reserve and do an update to the resource in the December quarter of this year. In terms of the Mount Gibson study itself, it is a really strong project. We're firm believers in its development potential. It's forecast to have 152,000 ounces a year of gold production for the first 7.5 years of the mine life, a peak production of 175,000 ounces, a 10-year mine life, a 1,420 Australian dollar all-in sustaining cost, a capital cost for a 5 million tonne per annum fresh rock processing plant of $260 million, so quite a modest capital requirement. We do need to spend about $80 million to mine down around the historic pits in order to give ourselves an enduring ore supply at the start-up of the operation. Very strong financials from the study, an NPV of $828 million, and importantly it pays the capital back in the first 1.9 years of operations. Really low technical risk project, again very similar to projects that we've successfully developed many times in the past. It's open pit mining, modest strip ratio, it'll be a contract mining operation, and then conventional processing, very clean ore body, very good recovery at a very coarse grind, which is key to firstly a very simple flow sheet and also to keeping our power cost or power consumption and power costs really low. And in terms of funding the project, we intend to fund the bulk of the development out of our own internal cash flow. We do have from Macquarie Bank, our bankers, a non-binding indicative offer of $200 million additional financing to finance the project. In terms of taking the project forward, we hope to be in a position to submit our environmental permitting applications later this quarter, and then subject to permitting timeframes, which obviously out of our control, but sort of using normal timeframes there, we would expect to be in construction at the project in the second half of calendar 2024, which would see us producing gold in the second half of calendar 2025. So a really strong project. There's no doubt that it's our next development opportunity. We're pushing ahead with that work, but we're also, as I said, we're drilling still quite extensively at the project to push the resource envelope deeper and to keep optimising the reserve as we go forward. And what's emerging as we do that work is that we're starting to see some genuine higher grade zones in the ore body as well. There wasn't an underground mine at this project back in the 90s, so there is known high grade zones at the project, and that's starting to emerge through our drilling. We're getting bonanza type grades with true widths of over 2 metres, particularly at the Orion deposit, where we've turned up 5 metres at 30 grams per tonne, 4 metres at 35 grams per tonne, and 4 metres at 13 grams per tonne. So basically, in parallel with pushing the resource envelope deeper, we will be focusing on these higher grade areas and basically try to work from known to unknown and incrementally step out from those deeper intercepts with a view to getting an underground resource model over time, understanding the extent of the mineralisation and seeing what that looks like in the medium term for underground potential. We do have a big tenement package at Mount Gibson. We're still getting some of the ground through the heritage survey process. So at the moment our focus is on near mine targets. We've got a 30,000 metre air core program underway as we speak, which is focused on southern extensions to the main mine trend and then parallel structures out to the northwest. So given how little work's been done exploration-wise on this project for the last 30 years, we're obviously optimistic that we can add to the mining inventory with further work on the tenement package over time. So look, thanks very much for your time this morning. I guess to wrap up and summarise Capricorn, we've got an A-grade project at Carlawinda. It's done everything we could have hoped it to do, producing around 120,000 ounces a year at lowest quartile cost and generating really strong cash to our balance sheet, which is, we'll use that to underpin our development of Mount Gibson. Mount Gibson, 1.45 million ounces of reserves. I think that will continue to grow with drilling over time. Forecast to produce over 150,000 ounces a year of gold from the project at lowest all-in sustaining cost quartile. So we're really excited about the project. We think that it can take us to plus 270,000 ounces a year of production, and if we can execute successfully at Mount Gibson like we have done at Carlawinda, then I think it's an incredible value proposition for the company and our shareholders. Thank you very much.
Thanks, Mark. We've had one question come in online here. So, given movements in staff and personnel in the industry, have you managed to hold on to your in-house development team that built Carlawinda and now are going to build Mount Gibson?
Have we, or
have you managed?
We
to?
have, yeah. And the reason is that we're a family company. You know, I see Nick Georgetta in the audience. Most of the blokes that we're working with are Nick's somewhere between my vintage and Nick's vintage. So we've been together as a group. You know, from Samantha Gold, Equi Gold, Regis, and it's family. So they're not allowed to leave, basically.
Yeah, congratulations, folks. Please thank Mark Clark.
Thanks very much.